think that especially in the major cities where a lot of ladies are working and making a decent salary, you see more and more ladies buying for themselves.
Okay.
And most of our sales are concentrated in the major cities. I mean, it's Mumbai, it's Delhi, it's Bangalore, it's Chennai, it's Calcutta, and so putting all those cities together, you have an important share of women who can afford from their activities a luxury watch and buy it by themselves. So I would say it's probably half. 50% are for gifts and 50% are for themselves. Well, it's very difficult to break even in India for the industry, not only for Tag Heuer.
Okay.
As long as you want to price your timepieces in India at the same level as out of India. When we started India in 2002, we had several promises. One being to import only officially, which we ever did. One other being to always bring to India the newest products. And the third one being to apply in India the same retail price as we apply in all the other major markets. Obviously, this third point means a huge financial sacrifice because we have to pay for the luxury tax, but at the same time we have to absorb it into our accounts. Because otherwise the consumer price will be much higher. Those two taxes are obviously squeezing our margin compared to other markets. Plus, in India, as there is a huge potential and it's a young market, we are also over-investing in marketing and retailing activities. So, if you take, less gross margin because of absorbing taxes, combined with more marketing than in many other countries and more retailing boutiques, then at the end of the day, obviously, you end up at a loss. The operational costs in India are significant because as the market is smaller, you don't sell as many timepieces per month in a boutique in India as you would do in Singapore. So at the end of the day, the equation is quite challenging. But as a company, we are global, so we have knowledge that some markets have different roles. So some markets are more mature and are used more to generate cash, and others are more under development like India and are consuming cash, which is logical. So at the end of the day, the point is that the company overall keeps growing in sales, in profit, in cash flow, but the growth is made of very different scenario, with countries generating a lot of profits to finance countries which one day will then generate profits. So there are investment countries and there are cash countries. Omega is the market leader in China. Which is quite unusual. Very often it's Rolex. So China is one of the, but Rolex is catching up pretty quickly in China. In India, let's say our business in India is smaller in value as in China, but our market position is better. So, in other words, the awareness of the brand, the reputation of the brand in India today is stronger than it is in China, probably because we somehow invested more in India. We benefited also in India of the partnership with Shah Rukh Khan, which has been a big booster to the company fame and awareness. And probably we understood the Indian market probably quicker than we did for the Chinese market, having in mind that in Chinese market some competitors had been present since 30 years, and Tag Heuer entered recently, whereas in India all brands were on a quite equal footing. With Shah Rukh, obviously, we are more in the glamour lifestyle dimension as we are in the sport dimension. Even as a character, Shah Rukh is very sporty. He's an actor taking a lot of challenges in Bollywood, but also out of Bollywood in sports. He's a sponsor of the Calcutta team. So his attitude to life is sporty, but he's not a sports person.